Hey everyone, ready for a deep dive?
Always.
Today we're going to be simplifying things.
Right.
Get it?
Uh-huh. Let's hear it.
Zaggle Prepaid Ocean Services Ltd, their Q2 FY25 results. That's what we're diving into.
Sounds interesting.
Got their official reports and, an investor presentation too, trying to decode, their financial health.
Looking forward to it.
So their big thing is simplifying spending, right?
Yeah, that's their whole pitch.
But how are they doing? Like, are they spending wisely? Earning wisely?
Good question. Well, one thing's for sure from the latest reports.
Okay, lay it on me.
Zaggle, they're having a fantastic year.
Really?
Yeah, Q2 first half results for fiscal year 25 expectations blown out of the water.
Wow, so significant growth compared to last year.
Oh yeah, definitely.
All right, give me the numbers, like what really pops out.
Okay, so revenue from operations skyrocketed.
Okay, skyrocketed. How much?
A 64.2% increase Q2 compared to same time last year.
Okay, that's for Q2, but what about like the whole first half?
Oh, for the whole first half, even bigger. A whopping 83.3% increase.
Wow, those are seriously impressive numbers. So, for someone like me who's not like a financial whiz,
Yeah.
what does that actually tell us? Like, what does that revenue increase really mean for their performance?
Well, basically, more business. Tons more. Their services, they're in high demand, that's what it's saying. Good sign, their market share is growing, becoming a real power player, especially in the Indian spend management world.
Okay, so revenue's up. Way up. Fantastic. What else is going on? Like, what else is fueling their success?
Okay, so their profit after tax, PAT, the profit after all the expenses and taxes are paid, that's also seen a huge jump.
Okay, how huge are we talking?
Massive. In Q2, 144.7% increase year over year.
So not just bringing in more money, they're actually holding onto more of it, becoming more profitable.
Really?
Okay, but how? What's the magic formula? How'd they pull this off?
Well, their reports, they point to a few things. More prepaid and credit cards being issued, way more. And their user base, it's exploding.
That makes sense.
New products, too.
Like what?
Zoyer, it's their spend management platform. Pretty cool. Then there's Zadex, that's their digital card solution. Oh, and they've got this whole fleet management program now.
So basically, they're not just keeping up, they're ahead of the game, innovating, giving businesses what they actually need.
Exactly. And they're not doing it alone either. Partnerships, they've been smart about it.
Yeah.
14 banks, private, public, doesn't matter. They've got connections. Gives them access to a wider network, more resources, the whole package.
So it really seems like they're firing on all cylinders,
Mm-hmm.
executing that growth strategy, riding that wave of the booming, the spend management market in India.
It's a good time to be in that space.
Yeah. Okay, but hold on. Before we get too excited, let's take a step back, understand, how this whole thing works. How do they actually make money? Like, what's their revenue model?
Okay, so Zaggle, they've got this multifaceted thing. They call it comprehensive monetization. Basically, they make money through, program fees, SaaS fees, VAS fees from lending and other financial products. Oh, and merchant commissions, too.
Okay, so for, someone who doesn't speak fluent finance, break it down for me. How does all that translate to profit?
Think of it like this. Zaggle, they're like a financial ecosystem connecting everyone, corporations, merchants, users, the whole lot.
Right.
They make transactions happen, all kinds, and each step of the way, they're earning.
Okay, so they're not putting all their eggs in one basket. They're diversifying their revenue streams.
Mm-hmm.
Smart.
Definitely.
But what about the future? Are they happy with where they are now, or are they aiming even higher?
Oh, Zaggle is not complacent at all. They've actually raised their revenue growth guidance for FY25 50% to 55%. Think about that. They're aiming to double their FY24 revenue in just 2 years.
Whoa, ambitious.
Very. And that's not all. Strategic alliances, mergers, acquisitions, maybe even going global. North America, APAC, MENA region, they're thinking big.
World domination, one transaction at a time. Sounds like a pretty exciting future.
Yeah.
But, are we getting a little ahead of ourselves here? Are there any potential roadblocks they might hit?
Oh, of course. Always risks, always uncertainties. The economy, competition, execution challenges, those can all throw a wrench in the works. Always got to keep those in mind.
Right. Good point. So future's looking bright, but investors got to stay cautious.
Absolutely.
But overall, it seems like Zaggle's in a great position to keep growing. What are some of the numbers that really back that up?
Well, their investor presentation, there are some pretty impressive stats in there. Customer churn rate, less than 1.5%. That means they're keeping almost all their customers.
Okay, so their customers are happy.
Very happy. And getting new customers, very efficient. Customer acquisition costs, less than 5% of total revenue. They're growing without spending a fortune, basically.
Smart. What else?
Recognition, tons of it. Industry awards, their products, their leadership, they're getting noticed.
Yeah, and their founder, Dr. Raj P. Narayanam, top 50 Indian digital finance influencer last year.
That's right.
So they're not just simplifying spending, they're raking in the accolades too.
Exactly. Now, to get a real grasp on their financial performance, let's dive into some of those key numbers.
Okay, let's do it. Let's start with revenue from operations. What were those figures for Q2 in the first half of FY25?
All right, Q2 of fiscal year 2025, revenue from operations hit a remarkable euro 3,025.6 million. That's a year-over-year increase of 64.2%.
Wow, that's a huge jump. What for the first half?
For the first half of the fiscal year, it jumps to 5,547.6 million. That's an 83.3% increase year-over-year.
Seriously impressive. Okay, now adjusted EBITDA, what were the numbers there?
So for Q2, adjusted EBITDA hit 295.2 million. That's up 35.8% year-over-year. And for the first half of FY25, it climbs to 551.0 million, a solid 55% increase year-over-year.
Okay, so they're growing revenue and getting more profitable. And what about their profit after tax? We know it's up, but by how much?
So for Q2, their profit after tax came in at 185.6 million. That's a 144.7% increase year-over-year.
Okay, that's huge. And for the first half of the year?
It reaches 352.8 million. That's an impressive 266% increase year-over-year.
All right, so we've established Zaggle's got some serious growth going on across the board. But how's that growth spread out across their different revenue streams?
Good question. Let's break down their Q2 revenue mix and see where those numbers are coming from.
Okay, sounds good. Let's start with software fees. What do they contribute to their Q2 revenue?
Software fees brought in 85 million in Q2.
Okay, and how does that compare to the same period last year?
Well, in Q2 of fiscal year 2024, software fees only amounted to 76 million. So we're looking at a year-over-year increase of about 12%.
Okay, so a decent increase, but not as dramatic as some of their other revenue streams. What about program fees? How did those perform in Q2?
Program fees were a big contributor, bringing in 1,261 million in Q2 revenue.
That's a pretty big chunk. How does that compare to the previous year?
It's a big jump. In Q2 of the previous fiscal year, program fees were only 486 million. So that's a year-over-year increase of over 150%. To be precise, 159.5%.
Wow, that's massive. Clearly, program fees are a big part of their revenue growth story. And finally, let's look at Propel platform revenue. That includes their gift card business, right? How'd that do in Q2?
Propel platform revenue hit 1,679 million in Q2. That's a 31.2% increase compared to the other 1,280 million they generated in Q2 of fiscal year 2024.
So solid growth there as well. Maybe not as dramatic as program fees, but still a good increase.
That's right. But it's important to note, all three of their revenue streams, they're all contributing to Zaggle's overall growth.
Yeah. That's really interesting to see how their different business segments are performing, how they all fit together to make their financial pictures so, well, successful.
We've covered a lot in this first part of our deep dive. Zaggle's Q2 results, their growth strategy, the key factors driving their revenue growth, but we're just getting started.
Exactly. There's a lot more to unpack. We'll delve deeper into their profit and loss statement next time, looking at the details of their profitability and analyzing their historical performance to really understand their journey. So if you're enjoying this financial adventure, stick with us for part 2. We'll be back with more insights into Zaggle's success story.
Looking forward to it.
Welcome back. We're digging deeper into Zaggle Prepaid Ocean Services Ltd's Q2 FY25 financials. Last time, remember, we saw their revenues through the roof. But now we're going kind of like under the hood, figuring out what's making them so profitable.
Yeah, time to dissect that profit and loss statement, see what's really driving those numbers.
All right, so Zaggle's doing well, we know that. But what specifically led to that, really strong profit performance in Q2?
Well, as we touched on earlier, that big revenue boost, it came from, I'd say, a surge in, prepaid and credit card usage. And their Propel platform revenue, that was a real powerhouse too. Plus, they've been onboarding a ton of new clients.
So more users, more spending, more revenue for Zaggle. But revenue's only one piece of the puzzle, right?
Right.
What about gross profit? How's that been affected by all this growth?
Oh, their gross profits definitely improved.
Yeah.
And part of that, it's their product mix. They've been focusing on those higher margin products, which is smart. Makes their overall profitability look even better.
Interesting. So by tweaking their product offerings, they've managed to boost their profit margins. But haven't they also been, like, expanding, investing in new stuff? Has that affected their expenses at all?
Of course, more business means more cost. Employee costs, operating expenses, those have gone up.
Makes sense. You got to spend money to make money.
Right. And a big chunk of that increase, it's those incentives and cashback offers they've been pushing. It's a competitive market. Got to keep those customers happy.
Yeah, rewarding users to fuel growth, it makes sense. But those rewards can get expensive. What about their finance costs?
Actually, good news there. Finance costs have gone down, mostly because they've reduced their debt.
So they're managing their debt well, good for investors, shows they're being responsible, not taking on too much risk. Anything else standing out on that profit and loss statement? Anything investors should keep an eye on?
Yeah, one thing. Their ESOP expenses, that's Employee Stock Ownership Plan for FY25, projected to be somewhere between euro 70 million and 90 million. It's an expense related to, those stock options they give employees. It's a decent chunk of change, but looks like they've factored it into their planning.
Okay, ESOPs. Got it. Now, what about their balance sheet? What insights can we get from that?
Well, one big change is their property, plant, and equipment, the PP&E. It's gone up because they bought a new building, they're expanding, need more space.
Literally building for the future. Good sign. Shows commitment. Anything else jump out at you?
Yeah, there's this big amount categorized as intangible assets under development. Basically, it's all those new products, the innovations they're cooking up, Zoyer, Zadex, their fleet management program, even their international payments platform, ZIP.
So they're putting their money where their mouth is. Not just talking about new products. They're investing real money to make them a reality.
Exactly. And speaking of investments, their balance sheet also shows the acquisition of Span across IT services, or TaxSpanner, as most people know them. That's another piece of their strategy, not just building new stuff, but buying existing companies to grow faster.
Smart. Okay, so we've peeked at their recent performance, seen some highlights from their profit and loss statement, their balance sheet. But to really understand their current success, it helps to look back, see where they came from.
Agreed. A little historical perspective always helps.
Right. So let's take a trip down memory lane, look at those historical financials, get the bigger picture. Let's start with their revenue from operations. What was it like a few years back, say, in FY21?
Back in FY21, their revenue from operations was $2,399.7 million.
Okay, and how has that number changed over time?
Well, it's been climbing pretty steadily. FY22, it jumps to $3,712.6 million. Then FY23, it hits $5,534.6 million. And by FY24, they crossed the euro 7,756 million mark.
Wow, consistently going up. That's a pretty healthy growth trend. What about profitability? Has their adjusted EBITDA kept pace with all that revenue growth?
Yeah, it's been on a similar upward trajectory. FY21, euros 276 million. By FY22, it's up to 599 million. FY23, it reaches 625 million. And finally, FY24, 856 million.
So not just more revenue, more profit too, reassuring for investors. But numbers only tell part of the story. What about their customer base? How has that evolved over the years?
Their customer base has been growing right along with everything else. Back in FY21, they had 1,092 corporate customers. By FY22, that number jumped to 1,753, then FY23, 2,411, and in FY24, they hit a pretty impressive 3,016 corporate customers.
So they're reeling in those corporate clients. But what about individual users, like the total number of people on their platform?
Oh, yeah, that's been growing too. FY21, they had 0.9 million users on the platform. FY22, it's up to 1.72 million. FY23, 2.27 million. And by FY24, they hit 2.73 million users.
So it's not just more companies, it's more people within those companies using Zaggle's services,
Right.
a multi-pronged growth strategy, and it seems to be working.
Exactly. It's all about expanding that reach. Now, let's round out our historical view with a glance at their balance sheet trends.
Okay, when you look back at their balance sheet, what stands out?
Well, in FY24, their total assets reached 6,961.36 million. That's a pretty big jump from previous years. Back in FY23, it was 2,347.59 million. FY22, euro 926.53 million. And in FY21, their total assets were just 620.8 million.
Wow, Their assets have grown significantly year after year. What about liabilities? Have those been keeping pace?
Their liabilities have, well, they've been up and down a bit. FY24 total liabilities were 1,207.54 million. FY23 it was actually higher, 1,860.08 million.
Yeah.
FY22 they generally managed to keep them under control, especially compared to their growing assets.
Yeah, their financial management seems pretty sound. Definitely in a good spot for continued growth. Okay, so we've looked at their recent performance, dug into their profit and loss statement, their balance sheet, even gone back in time to analyze their historical financials. Well, what's the big takeaway from all this data?
Big takeaway. Zaggle Prepaid Ocean Services Ltd, they're a company on the move. Innovative products, smart acquisitions, that growing customer base, and their financials. Looking strong. All signs point to continued success.
So they're not just simplifying spending for their clients. They're doing a pretty good job of simplifying their own path to financial success, too.
Yeah, I'd say so. But always important to remember, past performance, it's not a crystal ball. There are always risks. Things can change.
Right. Always good to keep that in mind. Now, let's zoom in on their journey since their IPO last year. They've clearly become a leader in India's spend management market, but what are some of those key milestones, those big achievements that mark this exciting phase of their growth?
Since their IPO, Zaggle's hit some pretty impressive milestones, both operationally and strategically. They've really expanded their customer base, user base, and the number of cards they've issued. They're solidifying their position as a top player in India's spend management scene.
Let's break those numbers down. First up, customers. What's the latest count?
Over 3,200 corporate customers. Pretty impressive.
That's a lot of trust they've built. And users. How many people are actively using their platform?
Over 3 million users actively engaged using their solutions. Shows just how widely adopted their platform has become.
And they're the #1 prepaid card issuer in the country, right?
That's right. Over 50 million cards issued. Nobody else comes close.
So big strides since their IPO.
Hmm.
But what about new products? Have they been actively innovating, expanding what they offer?
Oh, absolutely. They're constantly working on new, innovative solutions, making sure they're ready for the future, for whatever businesses need.
Give me some examples. What products are driving this revenue growth?
Well, Zoyer, their spend management platform, that's been huge. Zadex, their digital card solution, also gaining a lot of traction. And their fleet management program, that's been another success story. They've even stepped into the international payments space with their ZIP product, makes cross-border payments seamless and, keeps everything compliant.
So they're branching out, diversifying, smart move.
Definitely. Now, let's not forget their partnerships and acquisitions. Those have played a big role in their success, too.
Right, those strategic moves.
Yeah.
What are some of those collaborations and deals that have really shaped their journey?
Well, for starters, they've got partnerships with 14 banks, both private and public. That network gives them a lot of reach, lets them offer a wider range of financial products and services.
Strategic indeed. And what about acquisitions? Been active on that front.
Oh, yeah. They've made some key acquisitions. TaxBanner, for one, that really strengthened their position in employee tax benefits and expense management. And they've also invested in Mobileware Technologies, PVT Ltd., boosting their tech capabilities even further.
So they're growing organically and making those strategic acquisitions to accelerate things and expand their offerings. A balanced approach.
Exactly. And there are other key partnerships, too. RIA Travels, FCM, Skydo, Nishi Forex, all these collaborations have broadened their reach into specific market segments.
Busy bees indeed. But let's not forget the people behind Zaggle's success. Their management team, the board, they're the ones steering the ship. Tell us about some of the key players leading the charge.
Well, at the top, you've got Dr. Raj P. Naranam, the founder and executive chairman. He's the visionary, the one who set out to simplify spending, and his leadership's been crucial to their success.
And he was recognized as one of the top 50 Indian digital finance influencers in 2024, so he's definitely a respected figure in the field.
Absolutely. Then you have Avinash Ramesh Gadkindi, the managing director and CEO. He's the one driving growth, overseeing operations.
He's had a pretty impressive resume, worked at Citibank in India before joining Zaggle, and he's won awards too, like the Inspiring CEO Award from the Economic Times in 2022.
And the board of directors, they're a strong group, too. Aravamudan Krishna Kumar, an independent director, brings a ton of experience from his time as the non-executive chairman at UCO Bank and his previous role as MD at State Bank of India.
And Virat Sunil Dewanji, an additional director, over 30 years of experience building and growing retail consumer businesses. Held leadership positions at Kotak Group and A.F. Ferguson & Co.
And let's not forget the rest of the management team, people like Aditya Kumar, the chief financial officer, and Hari Priya, the company secretary and compliance officer. They're the ones keeping the financial and legal gears turning smoothly.
So a solid team of experienced professionals at the helm, guiding their strategy and driving growth.
Exactly. Their dedication to innovation, keeping the customer happy, and that strong growth strategy, it's all paid off. Now let's take a look at some of those key financial highlights, the numbers that tell the story of their success.
Okay, record-breaking performance across the board, we know that. But what are the specific numbers driving this financial success story?
All right, let's start with Q2 FY25. Revenue from operations hit $3,025.6 million, a 64.2% increase year over year.
Impressive. And for the first half of the fiscal year?
Get ready, it jumps to $5,547.6 million, an 83.3% increase year over year.
Whoa, that's acceleration right there. What about their adjusted EBITDA?
For Q2, adjusted EBITDA reached $295.2 million, a 35.8% increase year over year.
Okay, and for H1 FY25?
It climbs to euro 551.0 million, a 55% increase year over year.
All right, everyone's favorite metric, profit after tax. What did Zaggle deliver in Q2?
Hold on tight. Q2 PPT came in at 185.6 million. That's a whopping 144.7% increase year over year.
No wonder investors are excited. What about for the first half of the year?
It reaches an impressive year at 352.8 million. That's a 266% increase year over year.
Okay, they're clearly profitable, but what about cash flow? What's the story there?
Their cash PAT, which includes depreciation, amortization, and ESOP costs, stands at 238.2 million for Q2, a 42.6% increase year over year.
And for H1 FY25?
It reaches 458.2 million, a 72.2% increase year over year.
So they're not just making profit on paper, they're turning it into actual cash. That's a good sign.
Definitely. Now let's zoom in on their revenue mix, see which parts of the business are contributing the most. In Q2, program fees and Propel platform revenue, those were the big ones.
Can you break down those numbers for us?
Sure. Program fees brought in at 1,261 million in Q2, and Propel platform revenue hit 1,679 million. Software fees contributed 85 million to their Q2 revenue.
So program fees and Propel, those are driving the growth, while software fees play a smaller but still important role.
Exactly. It'll be interesting to see how this mix evolves as they keep adding new products and exploring new markets.
Definitely. Okay, let's look at their KPIs, those key performance indicators that tell us how efficiently they're operating and how happy their customers are.
One of the most impressive KPIs is their customer churn rate. It measures how many customers leave, and for Zaggle, it's less than 1.5%, really low.
So they're keeping their customers happy, making them want to stick around.
Exactly. Another key KPI is customer acquisition cost, how much it costs to get a new customer. Zaggle's managed to keep that below 5% of total revenue.
That's efficient. They're growing without breaking the bank to get new customers.
All right. Now, let's talk about their revenue patterns throughout the year.
Okay, how does their revenue usually break down over the quarters?
Well, they tend to have higher revenue in the third and fourth quarters.
So their revenue is a bit seasonal.
Yeah, it follows a pattern. To illustrate, let's look at their revenue from operations over the past few quarters. In Q1 of FY23, it was 886 million.
Okay, and how did it progress through the year?
In Q2 of FY23, it went up to 1,303 million. Then Q3, it jumped to 1,476 million. And in Q4, it hit 1,869 million. See that peak at the end of the year.
Yeah, they finished strong. What about FY24? Did that pattern hold up?
Yep. In Q1 of FY24, their revenue was 1,185 million. Q2, it jumped to 1,842 million. Q3, 1,995 million. And Q4 of FY24, they reached 2,734 million, another end-of-year surge.
Okay, so the seasonality continued. And how about their recent performance in FY25?
In Q1 of FY25, they brought in 2,522 million. And then, as we've already discussed, Q2 saw a big jump to 3,026 million.
So they're on track for another strong year, with potentially even higher revenue coming in the next couple of quarters.
Looks like it. Now, let's really dig into their profit and loss statement, starting with their Q2 FY25 performance.
All right, let's break down those numbers, see what's driving their profitability.
Okay, revenue from operations for Q2 FY25, it was 3,025.6 million, a 64.2% increase compared to Q2 of the previous fiscal year.
Big growth, we already know that. But what about their cost of point redemption or gift cards? That's a significant expense for them.
Right. In Q2 FY25, that cost came to euro 1,617.5 million.
Okay, and card consumption, how much did they spend on that in Q2?
Their card consumption expense in Q2 FY25 was 1.8 million.
All right, now on to their gross profit.
Their gross profit for Q2 FY25 was 1,406.3 million, which translates to a gross profit margin of 46.5%.
That's a big jump compared to Q2 FY24, when their gross profit was 701.5 million, with a gross profit margin of 38.1%.
Yeah, it really shows how that shift towards higher margin products is paying off.
Now, we talked about their employee benefits expense and incentive and cashback costs being on the rise, which makes sense with all this growth. What were those figures for Q2 FY25?
Their employee benefits expense came in at euro 150.9 million in Q2 FY25, and their incentive and cashback costs reached 789.7 million.
Okay, and how do those numbers compare to Q2 FY24?
Well, back in Q2 FY24, their employee benefits expense was 112.0 million, and their incentive and cashback costs were way lower, just 257.9 million.
So these costs have gone up, but it's an investment in growth and keeping both customers and employees happy.
Exactly. Now let's look at their other expenses, the general operational costs.
What was their total for those other expenses in Q2 FY25?
Their other expenses came to 170.4 million in Q2 FY25.
Okay, and how does that compare to Q2 FY24?
In Q2 FY24, they spent 114.1 million on other expenses. So it's gone up, but in line with their overall expansion.
All right, now, adjusted EBITDA, that gives us a good idea of their operational profitability.
In Q2 FY25, Zaggle's adjusted EBITDA was 295.2 million, with an adjusted EBITDA margin of 9.8%.
And what was it in Q2 FY24?
Back then, it was 217.5 million, and their adjusted EBITDA margin was 11.8%. So their margin has dipped slightly, but their actual adjusted EBITDA, it's gone up quite a bit, which reflects that strong earnings growth.
Now, let's add in those ESOP costs. Those are important for investors to consider.
Right. Their ESOP costs for Q2 FY25 were 28.2 million.
And what about Q2 FY24?
Back then, it was actually higher for 67.2 million.
So they've managed to bring those ESOP costs down. That's a good sign.
Definitely. Now, when we add those ESOP costs to their adjusted EBITDA, we get the reported EBITDA.
And what was Zaggle's reported EBITDA for Q2 FY25?
It was 267.1 million, with a reported EBITDA margin of 8.8%.
Okay, and how did that compare to their Q2 FY24 performance?
In Q2 FY24, it was just 150.3 million, with a reported EBITDA margin of 8.2%. So again, a big improvement in their reported EBITDA shows those earnings are growing nicely.
Now, let's factor in their other income, the revenue they get from outside their core operations.
Their other income for Q2 FY25 came in at 37.4 million.
And how much did they make from other income in Q2 FY24?
Only euro 6.7 million. Quite a bit lower. That increase in other income is a positive sign, means they're diversifying their revenue streams and boosting their overall profitability.
Okay, next up, depreciation expenses.
Right. That was 24.4 million for Q2 FY25.
And what was it in Q2 FY24?
Pretty similar, 24.0 million.
Okay, so putting all these pieces together, what's their earnings before interest and taxes, their EBIT?
Their EBIT for Q2 FY25 reached 280.1 million with an EBIT margin of 9.3%.
And what about Q2 FY24?
Back then, it was 133.0 million with an EBIT margin of 7.2%. So another significant improvement, both in EBIT and their margin, shows they're operating efficiently and profitably.
Now, let's factor in their finance costs. Remember, those have been trending downwards because of their smart debt management.
Right. Their finance costs for Q2 FY25 were 22.1 million.
And how does that compare to Q2 FY24?
It was higher back then, 33.7 million.
So those efforts to reduce debt, they're definitely paying off, helping their bottom line.
Absolutely. Now, taking all these figures into account, we get their profit before tax, their PBT.
And what was Zaggle's PBT for Q2 FY25?
It was 257.9 million.
And how does that compare to Q2 FY24?
Way lower back then, just 99.2 million.
All right, now let's factor in those taxes they got to pay.
Right. Their tax expenses for Q2 FY25 were 72.3 million.
And what about Q2 FY24?
They paid 23.4 million in taxes that quarter.
Okay, so after all that, what's their final profit after tax, their PT?
Drumroll, please. Their PD for Q2 FY25 came in at euro 185.6 million. That's a 144.7% increase compared to their Q2 FY24 PTT,
Right.
which was 75.9 million.
Wow, that's fantastic. And what's their PTM margin?
6.1%, a significant jump from the 4.1% they had in Q2 FY24.
All right, now let's get to that cash PAT. Remember, that gives us a more complete picture of their profitability, adding back depreciation, amortization, and those ESOP costs.
Right, so for Q2 FY25, their cash PT was 238.2 million. That's a 42.6% increase compared to Q2 FY24, when it was 167.1 million.
Okay, and what about their cash PT margin?
That came in at 7.9%, a healthy figure, shows they're generating solid cash flow.
Okay, before we wrap up this part, let's quickly touch on their earnings per share, their EPS. Investors always want to know about that.
Of course. Their basic EPS for Q2 FY25 was 1.51. Their diluted EPS was 1.50.
And for context, what were those figures in Q2 FY24?
Their basic EPS was 0.78, and their diluted EPS was 0.77. So another big improvement reflects that strong earnings growth and profitability you've been seeing.
Okay, so we've really dissected Zaggle's Q2 FY25 profit and loss statement, uncovered the key drivers behind their impressive financial performance. But our journey through Zaggle's financial landscape isn't over yet.
Right, we've still got their balance sheet to explore.
So join us for the final part of our deep dive, where we'll analyze their balance sheet in detail, looking at their assets, liabilities, and their overall financial health.
Welcome back. It's the final stretch of our deep dive into Zaggle Prepaid Ocean Services Ltd's Q2 FY25 financials. We've explored their growth, their profits, even looked back at their journey so far.
And now, the grand finale,
Yeah.
the balance sheet. We're going to see how healthy they are financially, what assets they've got, how they're handling their debts.
It's like we're doing a financial x-ray, seeing what's really going on beneath the surface.
Exactly. So first up, equity. This basically tells us the company's worth, after you subtract all the debts and liabilities. As of September 2024, Zaggle's total equity was $6,175.19 million.
Okay, that's a big number. Can we break that down a bit?
Sure. Their equity share capital, that's the value of the shares they've issued, that's $122.61 million. The rest, the $6,052.58 million, that falls under other equity. Includes things like retained earnings, basically profits they've kept and reinvested, and other reserves. So their equity position looks pretty strong. What about liabilities? How much debt are they carrying?
As of September 2024, their total liabilities were $1,289.42 million. Not too bad, especially compared to their equity.
You can split that into long-term and short-term liabilities.
Of course. Non-current liabilities, those are the long-term ones, they add up to $134.88 million. Includes borrowings, lease liabilities, and provisions for, well, various things that might come up. Then there's current liabilities. Those are due within a year. Those are $1,154.54 million.
What are the main things making up those current liabilities?
Mostly borrowings, $513.84 million of that. Also lease liabilities, trade payables, basically bills they need to pay, and some other financial liabilities.
So they've got a mix of short-term obligations, but overall their debt seems manageable.
Exactly. Now let's look at their assets, what they own, what they control. Both long-term stuff, non-current assets, and those more liquid assets, the current assets that can be quickly turned into cash.
Okay, let's start with those non-current assets. What's in that category?
Total non-current assets are $1,836.83 million. Things like property, plant, and equipment, intangible assets, those could be patents, trademarks, that sort of thing, and investments they've made in other companies.
So they've invested a good amount in those long-term assets. Those are key for their future growth.
Absolutely. Now, onto those current assets.
What's the breakdown there?
Current assets total $5,627.78 million. Things like inventories, trade receivables, that's money their customers owe them, and cash equivalents.
Okay, so they've got a decent amount of cash on hand and a lot tied up in those trade receivables, which means their business is generating revenue.
Exactly. Strong current asset position means they can handle those short-term obligations, keep things running smoothly.
All right, so we've covered their equity, their liabilities, their assets. What's the big takeaway from all of this?
Zaggle's balance sheet, it tells a story of a company that's financially solid, well-managed, their debt's not too high, their equity's strong, and those current assets are looking good. All signs point to them being ready for continued growth, continued success.
So they're not just simplifying spending for their clients, they're doing a great job of managing their own money too. But, as always, got to add the disclaimer, right? Past performance doesn't guarantee future results.
Absolutely. But looking at their recent performance, their strategic moves, they seem to be on a really good path.
Well, this brings us to the end of our deep dive into Zaggle Prepaid Ocean Services Ltd. We've explored their Q2 FY25 performance, from those impressive revenue numbers to the nitty-gritty details of their balance sheet.
We've seen their innovative products, those strategic acquisitions, their commitment to growing their customer base, and of course, their strong financial results. It's clear Zaggle's a company on the move, a company to watch.
We hope this deep dive has given you a clearer picture of Zaggle's financial landscape, their strategy, and their potential for future success.
And remember, the world of business and finance, it's constantly changing. Always something new to learn. So keep exploring, keep asking questions, and who knows, maybe you'll discover the next Zaggle.
Thanks for joining us. Until next time, happy investing.